China has been pushing for internationalization of the renminbi. The latest coming through from Donald Trump is that he is ready to put 100% tariffs on countries that shun the dollar. What would the impact be on the renminbi?
Wow. I think it's obviously a very strong retaliation on, and also trying to protect the U.S. dollar's hegemony. I think the U.S. dollars has been, one of the key reserve currencies, taking over 50% of the global reserve. But then at the same time, as you can see, for example, this year, cross-border trade over 50%. I think close to 60% of the cross-border trade from China is settled in RMB. Right? So it's in a way, taking over the dollar role as a settlement currency. So I think as a result, it's bound to invite very strong response, from the U.S. side, because the U.S. dollar is a sort of a privilege that the U.S. economy has been enjoying, and it's sort of a liquidity tax on the rest of the global economy. So I wouldn't be surprised to see, this kind of threat, this kind of sort of a very strong retaliation being imposed on, countries trying to unsettle the hegemony of the U.S. dollars.
Absolutely. Hao Hong, considering how well telegraphed Trump's draconian tariff proposals have been, do you think that China is ready from a resiliency and diversification perspective to be able to absorb that 100% tariff?
I think it's going to be a lose-lose situation. I think for China, because the export sector has been so strong and helping the Chinese growth, and as you can see, export growth is starting to slow down as well, right? So as a result, it would stop being, one of the most important growth engine for the Chinese economy, and in so doing, if the property sector continue to fail and manufacturing sector continue to suffer from excess capacity, then the Chinese economy would be struggling big time. I think for the U.S. though, if you impose such tariff, I think the U.S. current account deficit wouldn't change. All right, so the structure of the current account deficit would change from having a deficit against China to a deficit against maybe Mexico, Canada, many of the other trading partners that U.S. having. So I would say that it's a lose-lose situation, and also because the Chinese export sector has been so competitive, that it's been a driving force for global lower inflation. So if you put 100% tariff on Chinese exports, for example, one could only imagine how high the U.S. inflation is going to go.